The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Afternoon from TFNN. Welcome to the October 19th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, that's right, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. We're going to go figure out what the bulls and bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone. Now is not too soon. 877-927-6648 internationally, 727-445-1044. Would love to hear from you. So let's go ahead and get this show kick-started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, Dow is trading up 75 points. She's trading on 18,236. S&P is up 7, trading at 2147. NASDAQ up 5 points at 5249. Russell 2000 up 8, trading at 1225. The DAX closed up 14 points. The FTSE up 21. Gold's up 7. Silver's basically flat. 007 is really what it's up today. You got to like that. James Bond is in the silver market, trading out at 1765. You've got light sweet crude up $1.33, trading out at 51.94. Leading the charge here to the upside. Priceline up $14. Chipotle up 9. Google up 6. Pioneer Natural Resources up 6. To the downside, looks like Cooper Poly. No, it looks like it's Intuitive Surgical off 32 points. 5% or so, close to 5% to the downside. UniFirst Corp Mass, whatever that is, down 9% out here. Puma Biotech down 16%. Man, a few really off big today, percentage-wise. 14% for Imperva Inc. All right, so where do we begin? And actually, I don't know. I'm just sitting down in front of my system, have been preparing for this evening's workshop, which you can access. You can be a part of. Would love to have you be a part of tonight's workshop. You just come over to the homepage at TFNN.com, sign up for my newsletter service, normally $149. However, you've got a special promo going on, $49 out there, and you get access to tonight's workshop. Don't worry if you can't be there. It's archived. You get access to the prior 4 workshops that I've done. Extraordinary value. So, come on over and join me tonight. But, yesterday we made things simple. It's always nice when you use the KISS theory, right? To keep it simple. Steve, I know you sometimes you replace that last S with something else, but really it's supposed to be keep it simple, Steve. And so we do try to keep it simple. And so we boiled yesterday's market down to just one thing, just as if Curly was speaking to both you and I. And you know it's Curly. I'm not talking about Larry Moe and Curly out there. We're talking about the Curly that likes to ride horses. And we said let's break it down to just one thing, and that was a price point, right? We took out our number 2 pencil. We wrote down the number of 1550, and we said if price closed below 1550 on the VIX, that it would move down and test that 50-day exponential moving average. Right now it's priced at 1420. We're trading at 1425. It's been down to a low of 1387. I don't remember what the 50-day was exactly yesterday, but that ground has been covered. And the intention behind that was to help you make money, or if you were short, to help save you money. And, of course, make money because you could have taken your profits at that stage. So that now has been achieved. That was done. Didn't know if it would take a day or 2 days, what the time frame might be. But you and I looked at the prior patterns, right? Everybody else talks about it. They're just talk. not everybody, but 99.9% of the people, right, that I see on the boob tube out there, and just talk, just pulling stuff. You thought I was going to say something else out of thin air. You thought I was going to say pull it out of someplace else. And no, I didn't. This is a clean show out here with, maybe some undertones or overtones. But yesterday's call was the simple one, because what you and I are, really, we're just simply, we know about patterns. We know we put our shoes on the same way, which leg goes through the pant hole for those that wear pants, so on and so forth, right? We just know that we are creatures of habit. Well, the VIX index is a creature of habit as well. And so we took a look at what always happens. That way we didn't have to guarantee. Instead, we just knew what always happens when price, in yesterday's case, closed below that 1550 mark. It goes and visits that 50-day exponential moving average. Now, price is trading really right on that 50-day exponential moving average. So I can't look at this chart and tell you what the next move is going to be. If I could, I would, but I can't, so I won't. If we see a close, though, today below 1420, odds favor, and this is where I would be leaning to, odds favor a move down to 1199 or lower inside the VIX index. So what's going to happen to the markets if, in fact, we see the VIX index go from 1425 to 1199? Are the markets going to move down? Let's specifically say the S&P 500. And the answer there is no way. You can insert any word you want there. No way prices would move higher. But right now, sitting at it, it's a draw. I don't like draws. Instead, take out that number 2 pencil, write down 1420. Let's just say you see closing VIX today at $14. You're well enough below that 50-day. We ought to see it move down into the 1199-ish area out there. So that would be call number 2. Instead of just relying upon just this one thing today, we can't. Even though I want to use that keep it simple Steve approach, and I will try to do that, it's not that simple. Now, the New York Stock Exchange, for those of you that enjoy the New York Stock Exchange and or believe that that's the be-all to end-all, even though you can't trade it out there, well, then for those of you that utilize the New York Stock Exchange, then I would say, well, then the one thing that you'd pay attention to is the advanced decline oscillator, bottom panel of my screen. Remember, it gets down to that minus 150 level. What does the market do? That's right. It either bounces or finds a bottom out here. We saw the New York Stock Exchange get down there. We've seen those bounces. Now that bounce, depending on how today closes, is turning into a bottom. Yes, you heard it right here at TFNN. It's turning into a bottom. Why? Because that advanced decline oscillator is above zero. Right now, the reading 22.71. This is an end-of-day indicator. So really, you'd have to come back, and we'd have to take a look at end-of-day out here. But what it does is the preponderance of evidence when you get a close above the zero line says that the buyers are the ones in control. What negates that? What negates that is the following day a total give up. Then it was just simply one of those one-hit wonders. You bought that little 98, and they don't even have one-hit wonders anymore, do they? Maybe they do, but for the most part, not a whole lot. But the New York Stock Exchange, for those of you that are aficionados, I know what we can talk about when we come back here. I've heard day after day after day, if the U.S. dollar index goes up, this market is going to get crushed. Don't buy into that BS before Steve tells you what really happens. Steve Rhodes with TFNN. We'll be right back, folks.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, to the so-called experts, people with all kinds of years of knowledge. You know, you see them get paraded on the shows out here, on the financial shows, and they would actually have you believe or try to scare you in believing that if the U.S. dollar index gets stronger, I mean, just before I came on the air, in the background, I don't know if it was Nelson Peltz or whoever it was, you know, I mean, if a stronger dollar is not good for the markets. I mean, you hear them. I mean, they would, if you were a person that just relied upon others, didn't visually check things out yourself, and you relied upon them, you'd think that if the Fed was going to raise interest rates, all holy heck would break out, wouldn't you? I mean, really. Where do they get that information? What the heck do I mean? And I'm not going to go through the whole long spiel that we did. I think it was last week, if I'm not mistaken. We're just going to go to just this one chart. And we're just simply going to go ahead and take a look at the S&P 500, which is the top panel of the chart. And we're going to look at the U.S. dollar index, which is the bottom panel of this chart. Even though you and I went back to like 1990, I believe it was, right? So we went ahead and we did a test of basically 25 years, 26 years out there. Here, we're just going to do the last 5 years because let's face it, the U.S. dollar index has been moving higher since 2011. That is the bottom portion of my screen, right? You had the U.S. dollar index, in essence, back in April. This is a weekly chart that we're looking at, down around the $73 level, 73.10, okay? We're at 97.94 today. Basically, the way you look at the bottom panel of this chart here, U.S. dollar index has been moving higher for the last 5 years, has it not? Now, how about the stock market? What's the S&P 500 been doing? been moving higher for the last 5 years. Forget about going way back there. So who in their right mind, really? It's a weekly chart. We'll put it on a daily chart. You're going to see the same shenanigans out here where it just doesn't hold water. We'll go back to my cousin Vinny or something. But what the Sam heck are these guys? What is their agenda to be pushing this absolute nonsense? Really? Look at this chart. Let the chart speak for itself. No different than yesterday when you and I took a look at the VIX index and we said, look, here's a line in the sand. You cross this line in the sand. It's a red line, although yesterday I don't think it was a red line. I think it was it was a blue line. But okay, but it was a line in the sand. And we said, if the VIX does this, we can go back historically and tell you what the next move is going to be. So the beauty here, and this is where I'm really trying to set you up. You talk about being in an environment where buying the dips was the right move since 2009. Let's get the Fed to start really going ahead and moving interest rates higher, because what you want to be doing is sitting right there on that fence being ready to buy that next dip, because most people are going to buy into the load of nonsense, of factual information that's out there, and you want to be able to take advantage of that. So anyways, I just thought I would, you know how I hate disinformation. Hey, a bad trade, we're going to make bad trades, things of that sort. You know, it's not an intentional thing, but passing along just absolute hogwash and bad information, that kind of disgusts me. Okay, so we're there. Now what do we want to take a look at? Well, what we really want to take a look at, so what is it, okay, what is it that we should really be watching today? Because yesterday was so cool because I could give you just simply the one number. We know the VIX is sitting on the 50-day exponential moving average. So we're going to say, in essence, you're basically like still above it. So this says one up for the bulls. The Bears, I should say. Let me just take that, maybe restate that. The one up goes to the Bears out here. If we take a look at the S&P 500, let's go take a look at the S&P 500 out here. The line that I'm going to suggest that you pay attention to is 2142.81. Now, it's 83 right now. So the sense on this, and by sense I don't mean S-E-N-S-E, I mean C-E-N-T-S. The sense on this here, are somewhat irrelevant. They're relevant, but I don't want you to write down the sense going into 4 o'clock. Basically, you have a close above 2142 in the S&P 500. The price oscillator turns up. What does that mean? That's the red line. If you don't know about that red line, come sign up for my newsletter service so you get access to that workshop. So I show you, exactly how to plot that on your screen out there, and that'll be a beautiful thing, because when price is above that, it says you've either got it's good for the bulls. That's the simplest explanation. And it's either a counter trend rally, so more of a counter trend rally. Says you get back into, if we just take a look at a line out here, says you probably get back to the recent highs back around the September 23rd level out here. We just take a look at where our bearish candle signals are, right? It's pretty easy to draw that line out here. Let's do that. When you say it's easy to do, you can just simply go to the downdraft from September 9th, right? If we draw a horizontal line right across from that, we can see that that is where the bearish reversal signals set up. So you're looking at about a price point move out here of 2163. So the call right now is this. You close above 2142, you're going to see the S&P 500 make a move for that area of about 2163. So that's another 20-point move inside the S&P 500. What happens if you close below 2142? Odds favor, you could then take your left or right eye, go take a look at what the VIX index is doing, and I would almost guarantee, this one would be an almost guarantee, that the VIX index would be trading above its 50-day exponential moving average. Now, if it isn't and it's trading below there, then what you have is a coin toss, and the call there would be, well, if it's actually, it would be neutral. You would just simply have a non-synergy out there, and you like to have synergy. So the number to be watching today, not the New York Stock Exchange. It's not that I don't really care about it. I just don't care about it for you for trading, because you can't trade it. And it just doesn't mean a whole lot to focus a lot of time on something that you just absolutely can't trade. So 2142, that's the number to be watching. In the S&P 500, the Dow, let's go take a look at the Dow. The Dow itself is even more bullish. Now, the Dow had been the weak link out here. If we go take a look at the Dow, give me a moment here, Dow Jones Industrial, the number here to be watching would be 18,163 and change out here. You're at 18,242. So what the Dow has done today, or is doing today, at least as of 1:25 p.m., it is giving you nothing but a bullish message. Now, that bullish message, by the way, inside the Dow, no different than the S&P 500. All we have to do is just try to identify where is it that the bears are hanging out. And it's probably, a stretch, but it works. You can see all the bears. You have this nice gap to the downside, September 9th. Nice little bear sash, September 26th, as priced the day before. Found resistance up at that level. You say what level? By the way, that level would be 18,358. Price gets up there again on October the 11th. Another bear sash candle. Makes it sounds logical to me that is where price is going. That's the roadmap that the Dow has given us. Now, a different story exists inside what had been the strong indice out here, the NDX 100. Price here. I got the New York Stock Exchange. How did that happen? I guess I hit the wrong key. The NDX 100, it's got to close above. There we go with that gotta stuff. But it's got to close above 48.55.97 in order to get bullish. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up about 80. S&P is up nearly 8 points. One of our listeners, Rose, is asking if we could go take a look at two equities for her. So let's go do that. She's looking for a buy in this. I don't know if she's already in it. She's looking for the buy. It was an email that came a couple hours ago, and I didn't write down all the details, just the actual symbols. One of those being Tahoe, like Lake Tahoe. Have you ever been to Lake Tahoe? A very cool place. I don't know which route. Maybe there's only a couple of routes that you can actually take to get there. Of course, you could fly in, But the first time that I was in Lake Tahoe, I came from Reno, the traditional way. I suppose you fly into Reno, you hop in your car, and it was during the winter time too, which is really a gorgeous time of the year, to go over to Lake Tahoe. Nothing, especially if there's not a lot of snow and ice on the road, because they close that overpass down. Is that what they call it, an overpass? But just gorgeous place. You should get out there and check that out. In any event, I don't know that Tahoe Resources, whether it has anything. Hey, we should see if it does. Let's go see what Tahoe actually is or does. Tahoe, Taho. See if that has anything to do with the area. Probably not, but you never know. Tahoe Resources, together with subsidiaries, explores, develops, and operates mines in America. The company primarily produces copper, gold, silver, lead, zinc, and natural gas and petroleum. It holds interest in the Escobal mine property, Emerald Bay. Check out Emerald Bay. Is that where it's at? So I don't know where the Escobal mine property is. But these guys are located in Reno, Nevada, so we know where Tahoe does come from. So that's a beautiful thing. Now let's go actually take a look at the stock chart. So from this stock chart, if we take a look at this view, what do you say? What say you? Right? What say you? What do you see when you take a look at this stock chart out here? We made this nice little double top-ish type pattern out here. We can say a double top in this case because the bottom of that double top, the swing point, was down here right around June 14th, and prices below that level. In fact, we gapped down below that. So ordinarily, a double topping pattern says you've broken a consolidation, right? And that consolidation, in essence, looked like this. And so when you break a consolidation, you could say you might get a measured move that would be equal to that double topping pattern. That, in fact, inside of Tahoe could get you down into about the 851 level. However, as one of our friends would say, not so fast. Now, why would they say not so fast? If you just took a look at this chart, if you had not signed up for one of my workshops, which, by the way, tonight's workshop, you get access to this next tool that I share with you. As we take a look at Tahoe, what you and I know, one of our favorite patterns, right? One of our favorite tells inside of the market is when the market is moving higher or lower, doing it with less relative strength. That's defined by the tools that I use, not the way that it's taught in the trading materials from what's the guy's name? You know who I'm talking about, J. Wells Wilder. He doesn't teach it like this because I took what he did and made it better. That's life. We always take things we learn from others and make it better. At least that's what I think each of us do. In this case here, price has been moving lower, doing it with less relative energy. And on the 17th, today is the 19th, you actually got your bullish reversal signal. Also just happens to be a TD sequential count. I taught that in the workshop. That's going to be a part of this entire series, that if you sign up today, and you got to sign up today. If you decide to do it tomorrow, you will have missed the boat. And I don't want you to miss the boat here. It's extraordinary education. And so you get access to understanding Tom DeMark's system out here. So here's a TD sequential count. That oftentimes identifies a change in trend. Well, you now have your signal with that bull sash from 2 days ago. You've got it with price trading above that oscillator on change line. That's another workshop out there. And if we take a look at today, we come back to this chart here, price is trading above its TAS daily profile high. 1118, by the way, you can see the point of control, as the same price as the bottom of the box, a very key level of support. Now, where's Tahoe going to travel to next? Very simply, it's going to make a run. Let's put the volume on this here. Let's see what happened during that gap down. Give me a moment. see what kind of volume we had here during this gap down on the trading day of October the 4th. 3 million shares. Today you're up with about 1.1. And as long as what this needs to do, what it's likely going to do here, it's going to at least go test the TAS weekly bottom of its box out here. And that's going to be 1257. Now, you're not inside this equity just yet. So if you're not inside this equity just yet, your options are to come in now. I don't advise that. I would say wait to see if this thing can close above the TAS bottom of its weekly box, 1257. Now, why am I saying that? And I'm going to leave these two boxes so we know that that is something to look at. In fact, I'll make it easier for you with regard to why is Steve-O saying that? What is he looking at? Does that make it easier? How about this? I'll make it even easier to answer that question. Why I would say let's wait to see what happens when price gets above that bottom of that weekly box. Why? Because what would happen at the same time, simultaneously, is we would see that this would have been a false breakout to the downside because price would get back into that consolidation, and that would then set up the run for the top of that consolidation pattern. So even though we have a nice little short-term bottoming signal out here, what I want us to also pay attention to, let's see if I can pull that chart back up here. I can. I also want to pay attention to the fact that sometimes these patterns only work for a short period of time. Right? We saw that nice little price relative strength divergent pattern right here on September 11th, and all we saw was just a 2-day rise and a 2-day move sideways, and as soon as price got below that oscillator on change line there, September 12th, that was a bad scene because that was a price oscillator turning down below the zero line, very similar to the S&P 500 that we have going on right now. So you want to just be very careful here. When we take a look at these patterns, once we see either a topping or a bottoming pattern, then what you and I need to always do is go back and say, okay, where are the other levels of support or resistance? In this case here, you and I are solely focused on resistance. We're also focused on the mere fact of what is that pattern that took place here when it broke that double top, when it broke that consolidation low, and where is the reward to risk? So I would stay tight on Tahoe Resources, TAHO. Now the second stock that Rhodes wanted us to look at, CDE, Coeur d'Alene, I believe, is the mining company, right? That's they are located where? They're located in Seattle, not Seattle, in Washington. Is that right? I could be wrong, but that is correct. And if we take a look at this equity, geez, Louise, it almost looks similar. Idaho, thank you. Appreciate that. It almost looks similar to, in one sense or another, a little bit similar. Now, in this stock here, this is interesting because you can clearly see a descending price channel. Can you not? Just take a look at this. Here is in essence, here's what I would probably identify as our descending price channel inside this equity. So let's go ahead and we'll pull these lines back. In fact, we'll change the color on them. That way it stands out a little bit more and not to confuse it with some of the other colors out there. So let's just change that to red. Let's do that. So there is our descending price channel inside Coeur d'Alene, CDE. So when we get back from this break here, we can see price has made its head. It's bopped its head right into potential resistance. That's the bottom of its TAS weekly profile. That's 1167. But for Rhodes, let's go see what this equity is likely to do. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, we've got the Dow. Where is she? She's up 85 points. S&P is up 8. We're taking a look at CDE's, a ticker symbol, Core Mining Inc. And we're doing this for Rhodes. She's looking for a buy in this. So here's what we know about this this equity. It has completed a 1 to 1.272 A to B equals CD to the downside. It's been trading inside a descending price channel. There is nothing here that indicates to us whether this is going to be able to break that descending price channel. With regard to is this the time to buy, the answer for me would be no. And the reason would be this is too close to resistance areas out here. You've either got your horizontal resistance level of that TAS weekly bottom of its box, which is 1167, high today 1168. So we know that that is acting as resistance. And then you've got that descending price channel. The better buy on this would be for this to pull back with light volume. By light volume, I mean less than 5.7 million shares as it tests 1167. Then you would at least have a better reward to risk trade setup. Now, this may very well go ahead and break through this descending price channel. And if it does that, then I was wrong on the advice that I gave you. But this is the best advice that I can give you right now. Let's just take a look at the GDX and try to draw a similar pattern here. So in the case of the GDX, let's go ahead and draw a descending price channel. So let's look for problems in River City here. We'll go ahead and we'll change the we'll change those lines also, the descending price channel to red, right, instead of green. That way it doesn't confuse us with our horizontal levels that are green, which are the weekly TAS profiles out here. So let's change this up right now. There's our now in the case of the GDX, I recommend that you buy it now. My answer would be no. You should have bought it when we bought it inside the newsletter, which was days ago. Because now, again, you have a similar type situation where the reward to risk, you know, the GDX may very well find resistance at about 2583. 2583 is the bottom of its TAS box. 2583 or so is the top of that descending price channel. So there's not anything here just yet inside either the overall mining sector or or a CDE as a ticker symbol that suggests that now would be the time to strike. The time to strike would have been days ago, either taking a look at the weekly, the daily TAS market profile. It was really the signal came from here. I'll put this GDX up here versus which we didn't see inside of CDE. I didn't put the screen up because it just wasn't there, and I don't really like to waste your time. Now, this is the GDX. It doesn't show today's activity for whatever reason. I don't know what this delay factor is right now. But you can see that in this case here, price is moving lower, doing less relative energy. We like that pattern. Bull sash candle, follow through the next day. Price above the oscillator and change line. Price now above the TAS daily profile. All that is good for what? It's good for us to say that could be a significant bottom, and we now know that the next resistance level is going to be that descending price channel as well as the bottom of that box at 25.83. So, Rose, I hope that assists you with those two equities. That was CDE and Lake Tahoe, TAHO. I don't see any questions inside the Tiger's Den. Kind of a quiet Wednesday, a wonderful Wednesday nonetheless, but a quiet one. Let me just check here, see if there's anything by email that came in. There's not anything that I see. So that says we're free to go do something else. That something else would be what? What should we do that would be? Oh, probably what you'd like is some price projection. Well, I gave you a price projection, didn't I, in the S&P 500? I did. So what other price? Well, maybe for those of you that trade the equity futures contracts, let's go take a look at those. Let's go look at the daily equity futures contracts and see what their message is. Voila. Talk about diagonal levels of support and resistance. Let's take a look at the ES Mini. What is the ES Mini signaling to you? Where do you believe the ES Mini is going to, whoops, what the heck? That's so weird. And it just means I need to reset the system, I think. Now, if you're looking at this chart right here, which you are right now, because you and I are looking at this together. When you look at this chart, what is your price projection for the ES Mini? We're trading at 21.41 right now. What is your next price projection out here for the ES Mini? That's exactly right. It's going to be 21.47. 21.47 will get us to the top of the box. It's really 21.46.75, but we're going to go ahead and round that by one tick. And really, it's just a bit higher than that, right? It is that descending price channel, which is probably another 2 points higher than that. So around 24.49.50. We'll just call it 21.50. That is where the ES Mini is likely to head to. Now, is it going to head there by the end of today? That I don't know. But is that where it's headed to? Yeah, it really is. And that might be the next place where you would consider taking a look. A short, we'd have to take a look at some other patterns inside of the stock market. But is when we take a look at this chart here, is there anything that suggests to you that the ES Mini on a daily basis is getting ready to roll over and turn lower? No, it's not there. Let's go take a look at some of the other equity index futures charts out here. Let's take a look at the Dow, which has been a weak link out here. The Dow right now is above its weekly bottom of its box out here. That's super resistance, or has been super resistance. So if the Dow futures contract can close above 18,135, where do you think it's headed to next? 18,209, top of its daily box. Probably 18,335 is more likely the number, but we'll take things one step at a time. So the number inside the equity contract for the Dow futures, 18,135. You close above that today. What's the signal? I want higher price. That's actually the signal. It sounds actually just like that. If you take a look at what has been behaving weak out here, the NDX, or we take a look at the NQ, the futures contract, where's this headed to next? That's a good point. Where is this headed to next? The reality is, and maybe hey, guys in the den or girls in the den, ladies in the den, anybody that's in the den, anybody that's listening in, what inside the NDX, NQs, who's releasing what when? What during the next few days? Is there Apple, Google, any of the big weighted equities releasing their numbers? I probably should have a list out here. The reason I'm asking is because the NQ has got a ways to go in comparison to the Dow and the S&P 500, the ES Mini out here. Its setup tells you and I that what it wants to do is move up to the 48.86 to the 49.01 level, 48.86 to 40, and you're at 48.35 right now. So it's a little bit of a laggard here. So I was wondering who is reporting over the course of the next couple of days. We could go take a look at that stock chart and see what its message might be out here. But inside the NQ, this is not a message of bearishness, but what's easier here, probably easier said than done, is going to take a look at the 30-minute chart out here. What's the 30-minute chart here for the NQ communicate to you and I? Anything bad here? No. I mean, it could be setting up an A to B equals CD to the upside is what could happen. So let's take a look at what that would be. That would be this. That would be this pattern here. We come down to about 4 o'clock in the morning. That would be, looks like this morning we move up to about 11 o'clock. That's your B point. We do a little bit of retracement down into the low at about 12:30. So this here, the NQ says if you get above 4840.25, that's the number. You close above that, 4854 is its number. 4854 versus 4886. That's what the NQ is communicating to you and I right now. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. One of our Tigers writes in on the NDX 100 or the NQ equity futures contract, tells us the decline scenario with October 10th being the top. And what clues or action do you need to see to speculate upon a further decline into the November 15th, 20th timeframe? So it's an excellent question, and I can answer that very clearly for each of you out here. Here's where I would start, right? So I'm going to give you several factors that we need to take a look at. The very first factor with regard to we need to see the high that came in this morning at 11 o'clock not get taken out. Now, this is a 10-minute chart out here. But, folks, this is where it all begins, right? We take a look at some shorter-term time frames. We take a look at patterns that are supposed to be significant tops or bottoms, in this case here, significant topping pattern. And when they get taken out, there's nothing more bullish than a failed bearish pattern. Well, the 10-minute chart has that in place for us. And if we take a look at this, if we come back to the low out here at about 4 o'clock in the morning, 10-minute chart, you can see as you moved up to its high, you get to that seventh wave move. Right, so this is at a price high. Come on, work with me real quickly here. That's at a price high out here of 48.4025. If that gets taken out, what that's going to set up is an A to B equals CD to the upside, or the likelihood is that what we're seeing take place here is an A to B equals CD to the upside. That's going to give us that same price projection that we just looked at 48.54. So you need to see that G not get taken out. Otherwise, if you're looking to sell the market, you're going to have to sell it from a higher price. But if price moves too high, and you're going to say what is too high, above the oscillator unchanged line, that is 48.51 out here. If price moves above the 48.51 level, price is going to go higher. Hey, we've got a caller on the line out here, so let's go to our caller. Let's go to Don in Virginia, I believe it is. Don, thanks for calling. Thanks for holding. How are you today?
Hey, great, Steve. Say, I want to ask like a general question, like going into earnings, do you recommend, selling, bailing out? I mean, so many times I've gotten burned going into earnings. They might, the company might beat the earnings estimate, but they're low on revenue, or the guidance isn't good, and so stock falls. A good example is like Intel, which I own today, and
okay,
I'm a trader / investor, so I mean I do trade, but I do like to have, like, if I get a winner.
Don, I know exactly how you feel when a stock falls out of bed and it's a great stock that you're holding. You don't have to go any further. It is the entire reason that got me into technical trading. Okay. The first time I said, okay. The second time I said, geez, what did I miss? And the third time I said, I got to find some better answers out here. So it does not sound any different than the exact thing that got me into technical trading out here. That being said, then what I would do is go to some stock charts for Intel as an example and just see what kind of patterns are out there. And in the case of Intel, if we're just looking for clues out here, and you're watching us on TigerTV, the trading session here, when this thing had gapped up on September the 19th, you'll see a number 13 above my that little candle out there. And that is one of the signals that we look at. That's a TD combo count, Tom DeMark system out here. And that oftentimes can be an area of exhaustion. When you start to see these black lines on my chart go from a swing point to another swing point, it means price is moving higher, doing with less relative energy. So now you have two strikes against you to at least give us clues that the way that the market is going to respond, it's going to respond in a negative fashion. Doesn't mean that you have to sell it, because you might be a long-term holder of this. But what it does is it sets you up to anticipate that you get the type of results that we have today. And lastly, when Intel formed its most recent high on October 11th, there was a seventh wave move to the upside. 3 patterns right there telling you that the Intel was going to do what it's done today. I wish I had more time, but do me a favor, call back in tomorrow. We'll spend more time on it if you'd like, all right?
Thanks, Steve.
You bet. That was Don in Virginia. 3 patterns, folks. All 3 patterns are available in those workshops when you sign up for tonight's workshop. Have a great Wednesday, folks.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.